I hate to be the bearer of bad news, but some troubling signs are on the horizon. I'm talking about the ominous price cuts signal that we're seeing in the housing market. If you're not careful, you could be caught in the middle of the 2023 housing market crash. Now, I know what you're thinking. Oh, come on, it's just another scare tactic. But trust me, I'm not here to fearmonger. The truth is that the housing market is a fickle beast, and it's not always easy to predict what's going to happen next. But there are some clear warning signs that we can't ignore. So, what exactly is the price cuts signal all about? Well, it's exactly what it sounds like. Housing prices are being slashed left and right, which might seem good for buyers, but the reality is that these price cuts are a symptom of a much larger problem. The housing market is overinflated, and it's only a matter of time before the bubble bursts. I wish we could sugarcoat this for you, but I believe in being honest and upfront. The 2023 to 2024 housing market crash is coming, and it's going to be a doozy. And before I tell you facts you must know to protect yourself and your investments, please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe is fuel for the algorithm that helps support this channel. Thank you. Now, back to what I was saying. I have fresh data from the Mortgage Bankers of America that you need to know about. According to their latest report, the MBA index, which tracks how many people are applying for mortgage loans each week, just hit a record low of 178.6, the lowest since 1995. That's a huge deal because it means we're seeing one of the biggest housing demand declines ever. What's causing this sudden drop in people wanting to buy homes? Well, there are a lot of factors at play here, but one of the biggest ones is the insane interest rate hike. With interest rates rising higher than a skateboarder on a halfpipe, home buyers are getting spooked out and pulling back. It's like the real estate market is doing a trust fall and nobody wants to be the catcher. When demand for houses is low, the only way for prices to stay stable or even go higher is if the supply of homes also drops to match the low demand. This has been the situation for a whole year now, where the supply levels have remained just as low as the demand. And when supply and demand are balanced, prices tend to stay stable. But we've now reached a point where demand is so low that we can't really go much lower than where we're at. That means we're at a standstill with no clear direction for the market. It's like we're all waiting for something to happen, but we're not really sure what that is. So why is this happening? There are a lot of factors at play, but some experts think it might have to do with the uncertainty in the economy right now. With so many people losing their jobs or having their income reduced, buying a house is harder. And if people aren't buying houses, sellers can't sell them. But it's not just the economy that's at play here. Other factors include demographics and changing preferences for where people want to live. For example, people are increasingly interested in living in urban areas, which can be more expensive than suburban or rural areas. This means that demand for urban properties is on the rise. While it's true that the supply has been historically low for a while, things are finally starting to change. As of now, there are 534,906 active listings. But let me tell you, that's just the tip of the iceberg. I dug deeper into the stats and discovered that there's something called months of supply that's way more important to analyzing the housing market. This stat predicts the future, and it's not looking good right now. The months of supply are starting to decrease rapidly, so there might not be enough houses to go around soon. It's starting to look like a bleak scenario. The increase in demand for houses is not just coming from regular home buyers. Investors and big companies are starting to show a lot of interest in the housing market, which might drive up the prices even more. So if you plan on buying a house soon, you might want to act fast before it's too late. If we dive into the nitty-gritty and check out the data on the months of supply, it's honestly not looking too great. Right now, we're sitting at 3.1 months, which is already higher than the mini crash we faced last winter. And it's only going up even more. This means there's too much inventory floating around and not enough buyers to scoop it all up. And when sellers start to freak out and dump their properties on the market, things can get really messy. I'm talking about massive price cuts and the possibility of a full-blown crash. Believe it or not, you can have a crash with a low supply. It's all about demand. Right now, the demand seems to be at a near all-time low. This is a bit concerning because prices typically take a hit when demand is low. Now, let's talk about low liquidity. When buying and selling houses, there's this big issue called low liquidity. That means it can be super tough to quickly and easily make those transactions happen. It's a problem built into the market, even when everything's going great. You know that feeling when you buy a house for $300,000 and then have to sell it before you can even think about moving on to your next purchase? That's what we're talking about here. Unfortunately, this lack of liquidity is an issue that the housing market always faces, even in the best of times, and it can be a major problem for sellers, especially when market conditions change quickly. If they can't sell their house quickly enough, adjusting their prices to match the current market can be tough, and that can lead to overinflated prices that just aren't sustainable. And this problem isn't going away anytime soon. In fact, some experts believe it's only going to get worse in the coming years. That means buyers and sellers alike will have to be even more savvy when it comes to navigating the housing market. With such weak demand and low supply, it only takes a few transactions to cause huge price movements, which can really spook people. Many industry leaders are talking about how the market is frozen, but that's not the whole story. The frozen landscape everyone's talking about is just the start of a much bigger issue. It's been staring us right in the face, but not many people are willing to admit it. And unfortunately, this crash will likely start alongside this frozen market. It's important to note that this isn't just some wild speculation. There are facts and figures to back it up. For example, the median home price in the United States dropped by 2.8% from its all-time high in March 2023. And with the current state of the housing market, we'll likely continue to see a decline in prices. When the supply is so low, prices increase, leading to less demand. This creates a vicious cycle that's hard to break out of. And when there's no demand, prices plummet, leaving many homeowners in a tough spot. Start looking beyond the short-term effects of this frozen market and think long-term. We must focus on boosting demand and incentivizing people to buy homes. This could be through things like tax breaks or other financial incentives. So what's happening right now is what they call the speculation and fear phase of the stock market crash. This means that investors and speculators are getting hyped up about buying and selling stocks because they're afraid of missing out on potential gains. This behavior can make prices go all wonky, making it even harder to know what's a good investment and what's not. All this crazy speculative behavior actually makes things worse. It starts to distort prices and creates a kind of fake bubble that just can't last forever. And when things finally start to come crashing down, it's usually because we've hit the peak of all this greed and irrational decision making. You see, during times like these, people often forget to take a step back and really look at the big picture. They get caught up in the hype and forget to be realistic. And that's why crashes happen. It's like a bubble that just pops because it was never meant to last in the first place. So I advise anyone experiencing some of this fear and uncertainty right now to try and stay calm. Don't make any rash decisions that you might regret later. And most importantly, don't forget to take a step back and remember what matters in the long run. Despite facing serious challenges, I'm amazed by the consistently low unemployment rate and the overall resilient economic conditions we've been experiencing for years, despite the rising inflation. However, as we progress, we must remain aware that this could change anytime soon. And if it happens, it could become the tipping point that transforms the market's perception. When people start losing their jobs, they'll be forced to sell their properties quickly, adding to the already meager inventory count. Consequently, the real estate market will enter the domino effect's final phase as the prices start dropping in a chain reaction. In simpler terms, things might take an undesirable turn soon, and we should watch carefully. With a massive increase in the supply of housing units and a decrease in prices, the market will experience immense pressure, becoming an uphill task for sellers. We should be mindful of the current state of our economy and take appropriate measures to prepare ourselves. Thanks for watching, and please make sure you subscribe if you enjoyed the video, and leave a comment below letting me know what you're seeing in your local market.